Adding jobs in 37 states last month, and our next guest says that manufacturing is behind the silver lining in those state jobs numbers. Stephen Cochrane is Director of Regional Economics at Moody's Analytics, and he joins us to talk about it now. Thanks so much for spending some time with us today. Let's talk first about the picture of manufacturing, because yesterday we got kind of a negative picture from the Philly Fed Index. So is manufacturing helping us out more than pretty much anything else in this economy as far as jobs is concerned?
Yeah, we did get a little bit of a negative picture yesterday, but for the first half of the year, manufacturing has been pretty strong. As you know, there's been a lot of manufacturing just aiming towards either rebuilding inventory or supplying growing export markets. And also the auto industry has been a big part of this in terms of rebuilding after the Cash for Clunkers program depleted inventories very deeply. So manufacturing has been very strong, and that has been one of the reasons why employment has been looking good in a number of the manufacturing states. But that factor may be playing itself out, too, largely because we're not seeing much of an acceleration anymore in exports. Exports are still good, but not quite driving the way they were 6 months ago. And inventories are back up to levels that are more consistent with demand. So we may not see the push going forward. So I think that it's not going to be quite as powerful through the end of this year as it has the first half of the year, right?
I mean, Steve, more telling is the weekly jobless claims number that we got yesterday. It rose to the highest level since November. I mean, that number was staggering, 500,000 in the latest reporting week. That's a more telling story, a more accurate story than the state payroll numbers?
Well, it was a little bit of a surprise. I think we have to remember that the weekly jobless claims figures can be extremely volatile. The monthly state employment data alone can be kind of volatile, but the jobless claims are even more volatile. So, frankly, I'm a little hesitant to read too much into 1 week of 500,000 plus on the jobless claims. What it does show is that the labor market recovery is weak. We know that already, and the risk is that something. If some shock hits the economy that we don't foresee, that could be very serious in terms of knocking the labor market down right off of its feet. But I think there's enough positives in the economy to keep a very moderate pace of job growth going still over the coming months.
So you don't think that we're going to turn around? I mean, we talked to John Herman earlier. He thinks that we're going to get back above 10% in unemployment. Sri Kumar says he thinks we're going to get well above that 10%. But of course, that unemployment rate takes a lot of other things into account. So what do you expect for the labor picture at, say, at the end of this year?
That's right. Actually, if you told me that the unemployment rate was above 10% or was going to be above 10% at the end of the year, I wouldn't argue with that. We expect that it will be up at that point as well. But, one of the factors in terms of the unemployment rate is that when the economy expands, more people do re-enter back into the labor force. And while they are seeking jobs, the unemployment rate goes up. So that's really a part of the economic recovery, is that the unemployment rate on the top line, as you read that rate, likely will go up before it goes down next year.
So, Steve, calls for more targeted stimulus aimed at really job creation, like someone's writing into me and saying, what about a tax credit for, each job created by a company? Do we need something like that that's so targeted at job creation?
Well, it's a good question. It's a hard one to answer. I think the best way to answer that is that for some reason, small businesses in particular are holding back on hiring. A couple of reasons for that. One, most important, I think, is that credit is still rather tight for small businesses. It would be very, very helpful, I think, if there was some kind of a credit to help small businesses get over the hump in terms of both finding credit and also gaining the confidence to
Steve, let me jump in here and just tell you, we talked to Bill Dunkelberg from the NFIB that represents small business all the time. He says it's not the fact that they can't get loans. They don't want them because the climate is so uncertain right now.
Yeah, demand is weak. But it's very clear, too, that lending standards have been tightened quite considerably, and particularly for small businesses. So you see it on the supply side, you see it on the demand side as well.
All right, hey, Steve, thanks so much for joining us. Steve Cochrane there, Director of Regional Economics at Moody's Analytics, talking about the state of the states and the unemployment picture. It doesn't look good, basically, going forward, but he doesn't think it's going to look that we're going to see a contraction here. So.